All right, welcome back. We have a Tesla update. No easy way to say this. Garbage fire, dumpster fire, not good. So they announced their Q1 deliveries and the estimates were 457,000. They ended up producing 433,000 but only delivering 386,000. So that's a huge miss. I was thinking around 410, maybe 400. But I mean, I have no clue. But to see 386, that was a big shock, and that's a big disappointment. Not good. It's also strange that they produced 50,000 more than they delivered. So what are those cars doing? Just sitting there collecting dust. That's not good. And year over year, annual deliveries dropped almost 9%. So that is not good at all. And so from this, we know that their earnings are not going to be good. They're probably going to miss earnings. And who knows what they'll say on the earnings call. So demand is obviously soft. We knew this coming in. Again, if we go to the chart, we've got two missed earnings in a row here. And last call, I drew this blue line. I knew we weren't going anywhere. And it was going to be a soft couple of months. And the hope is we can recover towards the back end of 2024. So still hoping for that. We'll see. So not a lot of good news to announce on that front. The good news I can share with you is that they are rolling out a 1-month trial of full self-driving. And they have a new update when it comes to full self-driving. And it does look like a step function improvement. So that's good. Hopefully that can stir some more software sales where they have much higher margin than the cars. Every Tesla vehicle that's out there can be upgraded to full self-driving with an over-the-air update. So there's a potential to upsell to full self-driving. And, that's one of the best advantages when it comes to Tesla is that they can improve their vehicles instantly with an over-the-air update. When it comes to full self-driving, autopilot, fixing bugs, all those things. So hopefully that'll stir some demand and get some more sales when it comes to the full self-driving. Also, it does show their confidence in their product and the improvements that they made. The fact that they're just giving it away for 1 month. So I think that is a big tell that they've made some big changes and hopefully we're ready for prime time. I haven't got the email yet for my free month. I'm hoping that comes this week. Otherwise, I'm going to call Elon and say, what the heck? So I'll let you know how I feel about that, how my experience is. So I'll let you know. Stay tuned. Now we're going to go over the pros and the cons, and then we'll look at some catalysts, and we'll look at the chart. So these are more long-term, medium-term when it comes to the pros and the cons. Model Y, best-selling car in the world. Tesla's hands down the best manufacturing automotive company, and hopefully one of the best manufacturing companies, period, down the road. So that is what gives them another big advantage is they're able to produce these cars and get their margin, increase their margin by getting their costs down. So there's a lot of things there. I won't go too deep into it in this video, but that is one of their big advantages. And that helps them produce these battery packs and solar and energy at mass scale. So that whole industry is going to continue to grow. I've said it 1,000 times, our need for electricity is going to continue to skyrocket. We had a chip shortage when it comes to AI and building out these data centers. Next, we're going to have an electricity shortage to power all those computers. The supercharging network gets better and better every single week. I see more and more stations popping up near my house. I think the most recent update also shows when you go en route or when you click on a supercharging station in your car, it shows you how many stalls are available. That's always been there. But also it shows you how many cars are en route to that station. So if it shows that there's only 2 stalls available of 20, but 4 cars are going there, you may want to look for another supercharger if you could, just because you don't want to be racing someone to get into that spot. So that's pretty cool. And also the charging is getting faster and faster. So they've got a huge advantage there as well. When it comes to their technology for AI, and all the data that they have from all their vehicles are collecting data when it comes to full self-driving, and that is going to help improve their models, improve their process, and the next update is only going to be better than the last one. So them releasing full self-driving for a month is going to allow them to gather a lot more data. Over the last few years, just like everyone, they have been compute restraint, right? There's not enough chips to power these computers to run these models. But now, thanks to NVIDIA and Elon's relationship, they were able to get enough compute, and now they're no longer compute restraint. So they can say, everyone run full self-driving, we can handle all this data, and we can synthesize it and do what they do with all that data. So that's another big advantage for Tesla and full self-driving. Another pro is Elon, the innovator. What he does for SpaceX, Neuralink, Boring Company, Tesla, PayPal, it's hard to bet against this guy. So he's definitely a big driving force for the company. Now let's talk about the cons. To buy Tesla's products, you need to most likely borrow money. So Tesla is an interest rate sensitive stock. Interest rates they're not high over the long term, but they're high relative to where they've been over the last 10 years. So that makes the cost to buy their goods much more expensive. So that could be one of the big driving factors when it comes to the soft demand, because we are seeing softness in all automotive companies. So it is tied to interest rates. Once interest rates come down, you should see much more Teslas move off the line. The valuation. So Tesla's going to keep going back and forth between, is it a car company or is it a technology company? When Tesla was in the 300s, 400s, it was being valued as a technology AI company. Right now, it's being valued as just a car company. And when you look at its revenues, it's just a car company. It does have the potential to become a technology company down the road. Tesla has phenomenal technology, but you can't call it a technology company when 90% of its revenue comes from selling cars. It's a car company with phenomenal technology right now, and that's why the market is having to reprice Tesla. Now, as they get more revenue from full self-driving, potentially from robotics, that's when you can really say it's a technology company. Let's throw a higher multiple on it. We're not there yet. When the bull market, when a low interest rate, face-ripping bull market comes back, maybe we'll get back there. Another con is the competition in China. Mainly, let me put in BYD. BYD is a phenomenal company, and they are selling more vehicles in China than Tesla. Now, you'll never see BYD cars in the United States, just like you don't see Huawei phones in the United States. So Tesla's going to have to keep competing with BYD in China and the area around China. So that is going to keep continuing to eat into their profits. Tesla's no longer the only game in town when it comes to China. Tesla's the only game in town when it comes to the United States and some other places as well. So competition is catching up in China. We'll see if it catches up in Europe and other places. But in the United States, it's still nowhere near. No one's anywhere close to Tesla. China, slow down. So China's economy is kind of not in a good spot right now. That's all I'll say. And so BYD, their numbers are down, but they are still selling more than Tesla. iPhone sales in China is down. NVIDIA sales in China is down. AMD's sales in China is down. So that is hurting their numbers a little bit. China is around, it's either 20 or 12% of Tesla's revenue. So if China's hurting, that's going to hurt Tesla a little bit as well. And the final con I have on here is political Elon, and the Elon that is fighting the establishment. So when I say fighting the establishment, Elon fights against the unions, he fights against the social media companies, he doesn't like the current administration, and he makes those facts very well known on Twitter, on X. So, you know, I respect him for standing up for his beliefs and letting things be known. But it is going to hurt the stock. He's creating enemies, and so they're going to come after him, and he's going to turn some people off. He's going to turn some people on. He's going to turn some people off. So this is more of a short-term thing. So that is going to have a little bit of a weigh on the stock price. And I have a whole video on that. If you want to go watch it, it's called Everyone Hates Elon. Talks about all the things that are going down with him and how, it's a witch hunt after Elon. So go check that video out. When it comes to the catalyst, Cybertruck rolling out. I parked next to one last night. Full self-driving trial. We talked about that. The refresh Model 3, Model Y, they look phenomenal. And then we've got competition dying all over the place, especially in the United States. The Tesla Roadster may be finally coming. They did announce that they're partnering with SpaceX, and the 0 to 60 should be around 1 second. We'll see. But that is exciting. It will be cool. And we've got the Mexico plant is starting to be built. And for me personally, sentiment is increasing. Now, after their last earnings, my sentiment was pretty down in the dumps. The delivery numbers doesn't look good. Their execution is poor. But I do see the future, the dots are really starting to connect. So for me personally, I'm seeing a little bit more people too saying, Tesla stock sucks right now, but the company, it's a good company and it could be a good investment, but you're catching a falling knife. So that's kind of the sentiment I'm seeing from other people that haven't been Tesla bulls, as they're looking at Tesla saying, this stock always bounced back, but it is a falling knife right now. So speaking of a falling knife, let's look at the chart. Now, when we zoom way out, Tesla is in this big downtrend here, and we're in a trend within the trend. So again, Tesla was $5, $10, $15, boom, shoots up to $300. You need a few years to digest those gains, right? So to me, this isn't the end of the world. Yeah, it's down big, but it's made such a huge move. It's really just consolidating when you really zoom out. But yes, it is down. How far are we down from the peak? And it should have never been at $400. But we are down 60% from the all-time high 861 days ago. So it's quite the drawdown. And I drew this blue line after their most recent earnings, and it's not playing out exactly, but you can see I wasn't expecting us to retest this upper part of the trend anytime soon. And again, I don't think we'll retest that anytime soon. Maybe the back half of 2024 is what I'm hoping for. But if we do break this support here, that's where things get a little scary, and we may be retesting $100. Tesla at $100, unless something fundamentally changes with the company, right? Tesla at $100 is just an IQ test, in my opinion. So again, not a lot of good news to report. We'll see what they say in the earnings call. Hopefully Elon and company can get it together on this earnings call, because it's been 2 bad earnings calls in a row. So hopefully they can be a little bit more professional and talk about what they're doing and not, cry like little babies like they've had in the past. So short term bad, execution bad. Long term, I'm still bullish. I'm still holding. So that's all I got for you today. Everyone have a great day. Enjoy the sunshine. That's all I got. Peace out.